Hey guys, Prajakta Kohli here, your friendly neighborhood finance enthusiast. Let's talk about growing your money, because who doesn't love a fatter wallet? We all know saving is important, but are you really making your money work for you? It's not just about stashing cash away, it's about making strategic decisions that can help your money grow over time. That's where mutual funds come in. They're like the superheroes of the investment world. Imagine having a team of financial experts working tirelessly to grow your savings. Mutual funds pool money from multiple investors and invest it in a diversified portfolio of assets, like stocks and bonds. This means your money is spread across various investments, reducing risk and increasing potential returns. Think of it like a team effort for your money. Instead of going it alone, you have a group of professionals making informed decisions on your behalf. This approach offers a simple and effective way to grow your savings faster than traditional methods. By leveraging the expertise of fund managers, you can potentially see higher returns on your investments. So buckle up as we dive deeper into why mutual funds are the smartest investment choice for you. We'll explore the different types of mutual funds, how they work, and how you can get started. Ready to become a financial superhero? Let's go. Whether you're a beginner or an experienced investor, there's always something new to learn about making your money work harder for you. Stay tuned as we break down the essentials and help you level up your savings game. One of the coolest things about mutual funds is that they're managed by professionals. These aren't just any professionals. They are seasoned experts with years of experience in the financial markets. They have dedicated their careers to understanding the intricacies of investing, and they bring that wealth of knowledge to managing your mutual funds. These financial wizards, also known as fund managers, are like having a personal investment team working behind the scenes. Imagine having a group of highly skilled individuals who are constantly monitoring the market, analyzing trends, and making strategic decisions to grow your investments. It's like having a dream team of financial experts working tirelessly to ensure your money is in the best possible hands. They research, analyze, and make investment decisions on your behalf, so you don't have to be a stock market whiz to make smart investments. These professionals spend countless hours poring over financial reports, studying market movements, and evaluating potential investment opportunities. They use sophisticated tools and models to predict market behavior and make informed decisions that align with your financial goals. These experts dedicate their time and expertise to maximize your returns. They are constantly on the lookout for the best investment opportunities, whether it's in stocks, bonds, or other financial instruments. Their goal is to optimize your portfolio's performance, balancing risk and reward to achieve the best possible outcomes. They use their knowledge and experience to navigate the complexities of the market, ensuring your money is working hard for you. The financial markets can be unpredictable and challenging to understand, but these professionals have the skills and insights to make sense of it all. They stay updated with the latest market trends, economic indicators, and geopolitical events that could impact your investments. So, sit back, relax, and let the pros handle it. With a team of experts managing your investments, you can focus on other important aspects of your life. Whether it's spending time with family, pursuing hobbies, or simply enjoying some well-deserved leisure, you can have peace of mind knowing that your financial future is in capable hands. Having a dedicated team on your side? That's what I call smart investing. It's not just about making money, it's about having a strategy, a plan, and a team that understands your financial aspirations. With their expertise, you can achieve your financial goals more efficiently and effectively. So, trust in your personal finance squad and watch your investments flourish. Remember what your grandma said about not putting all your eggs in one basket? Well, she was totally onto something. Diversification is crucial for minimizing risk in your investment portfolio. Mutual funds get this, which is why they invest in a variety of assets. This diversification acts as a safety net for your money. If one investment doesn't perform well, others can pick up the slack, protecting your overall savings from major losses. It's like having a backup plan for your backup plan. Diversification, it's not just for breakfast anymore. Let's talk numbers, shall we? While fixed deposits offer guaranteed returns, they often come with lower interest rates. This means your money might not grow as quickly as it could with other investment options. Mutual funds, on the other hand, have the potential for higher returns over the long term. Remember, higher returns mean more money in your pocket. While mutual funds don't offer guaranteed returns, because, let's be real, nothing in life is guaranteed, their potential for growth makes them a more attractive option for long-term investors. Ready to see your money grow? Mutual funds are the way to go. proof is in the pudding. Mutual funds win long-term. But what does that really mean for you as an investor? Let's break it down with a simple example. Let's say you decide to invest 10,000 rupees in both a fixed deposit and a mutual fund for a period of 10 years. This will help us understand the difference in returns between these two popular investment options. The fixed deposit offers a 5% interest rate, which is considered safe and predictable. On the other hand, the mutual fund, with its diversified portfolio and potential for growth, yields an average of 8% per year. This higher rate is due to the fund's ability to invest in a variety of assets, including stocks, bonds, and other securities. After a decade, your fixed deposit would be worth approximately 16,289 rupees. This is because the interest is compounded annually, leading to steady but modest growth. However, your mutual fund investment could grow to a whopping 21,589 rupees. This significant increase is due to the power of compounding and the higher average returns that mutual funds typically offer. That's a difference of over 5,000 rupees. This extra amount can make a substantial difference in achieving your financial goals, whether it's for retirement, buying a home, or funding your child's education. This simple example clearly illustrates the power of compounding and the long-term benefits of investing in mutual funds. Compounding allows your investment to grow exponentially over time, as the returns you earn each year are reinvested to generate even more returns. See, mutual funds are the clear winners in the long run. By choosing to invest in mutual funds, you are not only taking advantage of higher potential returns, but also benefiting from professional management and diversification. This makes mutual funds an excellent choice for long-term investors looking to maximize their wealth. So, the next time you're considering where to invest your hard-earned money, remember the power of mutual funds. They offer a balanced approach to investing, combining growth potential with risk management. Over the long term, this strategy can help you achieve your financial dreams and secure a prosperous future. In conclusion, while fixed deposits provide safety and predictability, mutual funds offer the potential for significantly higher returns through the power of compounding and diversification. Make the smart choice and let your money work harder for you with mutual funds. Happy investing! Still unsure? Let's chat. Free financial calculators inside. I know, all this financial jargon can be overwhelming. But don't worry, I've got your back. I'm giving away 10 free financial calculators to help you make informed investment decisions. Just send me a screenshot of you watching this video on WhatsApp, and I'll send you the link. These calculators will help you understand concepts like compound interest, investment returns, and more. Because knowledge is power, and I want you to be a financial powerhouse. Let's make smart money moves together. You got this. Making smart money moves. Investing your hard-earned money is a big decision, and it's important to do your research and choose the option that best suits your financial goals. Mutual funds offer a fantastic opportunity to grow your wealth over time, thanks to their professional management, diversification benefits, and potential for higher returns. Remember, the earlier you start investing, the more time your money has to grow. So, what are you waiting for? Take that first step towards financial freedom and explore the world of mutual funds today. You've got this. Disclaimer. This is not financial advice. Hey guys, just a quick reminder that I'm not a financial advisor. This video is for informational purposes only and shouldn't be considered financial advice. Always consult with a qualified financial advisor before making any investment decisions. They can help you create a personalized plan that aligns with your individual needs and risk tolerance. Stay informed, make smart choices, and watch your money grow. About the author. Prajakta Kohli, better known by her online persona Mostly Sane, is an Indian YouTuber and actress known for her comedic videos. She is one of the most popular YouTubers in India. Call to action. Subscribe for more finance tips. Did you find this video helpful? Hit that subscribe button and turn on notifications so you never miss a beat. I'll be sharing more finance tips, tricks, and insights to help you navigate the exciting world of money. See you in the next video. Bye.